All right, guys, guess who is back? Yes, it's gold. So we're going to go over what's happening with gold. We're going to look at one vehicle, investment vehicle that you can use to trade gold, and a very easy way just to play in the options market. So let's jump there and make sure, if you're new to my channel, make sure you subscribe because you want to go over these ideas. Maybe the ideas are just a way to guide you. It doesn't have to be something that you will use, right? It's something that it gives a little bit of guidance that you can play with, okay? You don't need to subscribe because I need the YouTube views. That's not the case. I'm here to help you, guide you, and make sure you have a potential against any type of market. If it's going up, we want to make sure you get the most out of a bull market. If it's going down, you want to offset potential losses from your main 401k, or if you have a retirement account, or you have a long-term investments, and you want to make sure that you don't eat all the drawdown, then make sure you subscribe because I will show you exactly how you can use options to do just that, to fight back the Fed or fight anyone back, okay? You don't have to be afraid when you're educated and you have the tools. Okay, so let's go. At GLD, this is the SPDR Gold Trust. This is how I'm going to look into this idea. Now, what's happening is out there, you have the US dollar. The US dollar is in a breakout, rotating lower. It's a bearish rotation, and it will be confirmed if this week we have a close under 110. Again, if the dollar index closes under 110 by the end of the week, we have a confirmation that for the time being that run into the US dollar, it's over or it's exhausted. That doesn't mean that it cannot actually push back in the next couple months. I mean, of course, things are not better in Europe, so the euro is not exactly a safe haven. It's not a strong currency, but it's not good for them from the inflation standpoint and business point to have a very weak euro. That means euro under parity. And then for the Great British Pound, the new government, the new prime minister, they kind of U-turn some decisions, and U-turns is just a way to say, okay, we didn't think this through, right? So it's better to do that rather than just go out and kind of build up an apology for your entire country mates, right? Country women and countrymen. So fantastic. So having said that, we have a bearish trend line all the way from the beginning of March of 2022. And we have this is a touch number 1, 2, and potentially this will be 3. So this 1, 2, 3. This is what we call the decision-making point. I repeat, decision-making point, pretty basic. Now, to the upside, I think this time we're going to break it, and we potentially can move all the way to 168. Now, let's think about short term. So you're looking to offset some potential losses that you have from big growth companies that you have in your portfolio, and you're going to use this in the short term. Also, maybe you want to do some groceries, right? Now, that's the case. So we're going to look for short-term opportunities, but that they do make sense. You won't risk a lot in front, right there at the beginning, and the potential payout is higher. So we look at Quote Media, and I found this one because you just use the guidance that you get from these price behavior, previous price action. August, it was 168, so you might easily come back and recover that level. So the strike price, so far the price at the close yesterday, 158. And if we pick the 165 strike price, then we're looking last trade was 61. Make sure you pay, if you can get it for 60 cents, that's fantastic. If not, pay no more than 75 cents. Now the low was 27 cents, so we're just up 200% from that low. Yesterday, we have 1,668 contracts, and the open interest is pretty fat right there with 32,000 contracts. It's not that bad. I would like today to see more action. I would like this to be somewhere close to the 34,000 neighborhood. That means that they're adding to the position. Someone knows something, and we're not going to fight them. We're just going to join them. Probably the Wall Street elite. So contract high, $11. Do I think it's going to get there? No, but there's a nice guidance. What I use as a guidance is the price of the contract a month before or 5 days ago. A month ago or a month before this point, it was $1.60. So it's kind of similar to my first video of the day with Facebook. you're looking to double your money if everything goes as expected, right? Always remember, past performance does not indicate future performance. So take one contract if you're new to the business of options, all right? Now, the other way I will do is just pretty much I will take probably $1,000 in this one, and I like to do is to take based on the number of contracts. I like to sell half of my contracts at 50%, yeah, 50% profit. Then I adjust my stop loss. You can use a stop loss as well and reduce the risk in the rest of the contracts. And then once I get to 120, 130, I exit all my contracts. That's pretty basic money management and position management, right? So money management will be for you to trade based on your account size. If you have an account size of $600, for example, then one contract is 10% of your account. So you want only to trade one contract because you're risking 10% on that particular trade. That's something that you have to keep in mind. So that's it for this trade. It's pretty simple, based on the dollar rotating lower. Full confirmation by the end of the week. Absolutely, you don't have the breakout yet. I'm still taking risk. That's fine because based on the conditions, based on what the US dollar index has been doing for the last, well, since the great financial crisis, I think at this point, and looking at the macro picture, emerging markets being pressured by a strong dollar. Very nice for the US, very bad for emerging markets. So if you look at the case of Sri Lanka, that makes you think what's happening there. So pay attention. The other thing when it comes to technical analysis, no secret, Hawkeye trading tools. We have the first bar in the heat map. This is the heat map in the short term, okay? And roadkill, this configuration is the one I use, goes with, this is 1 day. It means that it turned bullish. That's a very good sign. We have the big dot green there on roadkill. This is just for potential entries, buy, sell entries. And we also have momentum in the short term turning light green. If you look what happened in the past all the way to July, if I take this first bar, it gave us a move to the upside equal to 3%. So that's the case. I will say that 3% will take me all the way to 160. So that shouldn't be difficult. It looks very doable. And I will look for more upside potential once we have the breakout, retest, and then I wouldn't be surprised if by November we're trading at 168 for GLD. That would be gold. Guys, thank you so much for watching. This is my second video of the day. I will come with a third video and I will go over what the indexes are doing. SPY, QQQ, IWM, and how always you can use quote media, and you just have to have a little bit of understanding and how the Wall Street elite rotates capital. And volume can be an indication. I mean, it's just a piece of the puzzle, but also proper selection. You gotta be smart with your contracts. Not all the time you have to trade weeklies to make money, but also if you are actually buying in the money, deep in the money, at the money, not too far from the money. So there are multiple ways, okay, for you guys to make money trading options. That doesn't mean that you have to YOLO or go all in, okay? Guys, thank you so much. This is what I have for you today. Thank you for all to the team of Hawkeye. This is the contract we are playing with. Betting as well. Make sure if you get it at 60 cents per contract, it's fantastic. Pay no more than 70 to 75 today, okay? Guys, I gotta go. I'm gonna prepare the next video. But as always, never forget, someone always knows.